Good afternoon. Today, I'm going to start my lesson with the second unit. 1 minute. Now, today's class is company final accounts. What is a company final accounts? Till now, you have seen that all the previous units that is about the company which has peculiar features which is distinct with the proprietor and the partnership. So, where the partnership from proprietor and partnership form of an organization, where it is namely it is separate and independent legal entity. Voluntary association means that is an artificial company is an artificial, where it has a, some of the features where it has a separate legal entity, voluntary association of persons, perpetual existence, limited liability, common seal, etc. So here the management company affairs with the entrusted to the board of directors, where it is consists which is a specifically it by its shareholders for the purpose. Means presently in India all the companies are governed by the previous Company Act with the 2013, and with the various aspects where is related to the company's external affairs and the internal management, etc., which among other things include maintain, maintenance of the companies and books of accounts, how they are preparing the final accounts. That is every company it is mandatory to require the compiling the provision of the company's final accounts. That is the act of 2013. So now we'll see the what are the general requirements for the Company Act 2013, and each and every one. Now it is advised to acquaint yourself. That is whatever the company, if suppose if you are want to start your business, so at the time you have to minimum general requirement is there for presentation of your company final accounts. That is according to the Company Act 2013. And here we'll see books of accounts. What are the books should be maintained in the company final accounts? That is, what are the records are included to maintain. So here, the first one is all the money which are received and expended. Means whatever the income you are receiving, whatever the expenditure you are doing, that is by a company, that all the relation which is it is a receipts and expenditure will be take place. The next one is whatever the sales, purchases of goods and services by the company. Means these are the things where you have to maintain the books of accounts. That is according to the section 2 and the 13. The first one is expenditure and the receipts. Whatever it is taking place in the company, for that you have to maintain the one book. Next is all the sales, whatever the sales and purchases, that is goods and services of the by the company, that is a book. And the next, what are the assets and the liabilities of the company? That is one. The other one is the items of the cost as may be prescribed under the 148 case. That is a company, they have to specify it under the sections. They have to maintain it. The next one is a financial statements. These are the financial statements, that is section 2 and 40. These are the things which is relation to the companies. So it includes, that is the first one is a balance sheet as it is a end of the financial year. The first one. And by the end of the year, you have to maintain the financial statement, that is a balance sheet should be maintained. The next one is profit and loss, or in case of companies where it is carrying or on any activity not for profit and income or expenditure. So here you have to make any activity not for profit, that is whatever the income and expenditure account for the financial year, in case when you are making the activities. Next is a cash flow statement for the financial. Whatever the cash flow means, cash flow means what you are making the financial statements, what you are investing, and what are the assets you are buying. These are all the things you have to see in the financial year. The next is a statement of changing in equity. Change of equity, what you are equity wherever it is applicable. And next is a explanatory note, that is annexed. So that is where they have the subclauses, whatever the documents are referred and whatever the forming part, that all the things should be made. That is a subclause of 1 and subclause of 4. Now, exemptions also there. That is a financial statements with respect to the one-person company, small company, dormant company may not include the cash flow statement. There is an exemption that is in the financial statement for these are the people with the respect of one-person company, small company, and a dormant company. They may not include the cash flow statement. The next is a what are the accounts of a company? So, according to the Company Act 2013, they have given that accounts of companies are mandatory requirement. Mandatory, where you are running your company without any books, without any balance sheet, without any profit and loss, then how it will be made? So, how can you make it is as a profit? So here in the accounts of the companies and the mandatory requirements, they have to compile all the by the compiled with the companies which run through the provision of section 128. And even it is also provided here. The first one is bank of books of accounts, etc., to be kept by the company. That is section where it is a mandatorily where you have to maintain, that is a section number 128. The first one is the books of accounts should be kept by the company, and it is when you are every company shall prepare and keep at its registered office, wherever it is registered by every company, they have to prepare and keep at its registered office of account and other relevant books and the papers, financial statements for every financial year, which are should be true and fair, and that should be statement of affairs which are included its branch office or offices if any, and they have to make the transactions where it is should be both registered office, and even it is a branch office. The book should be kept accrual basis, that is according to the double entry system. And even they have to make such books should be relevant papers and electronic mode, and then it's in such a manner it should be prescribed. And here, board of directors also, they must decide where the decision should be taken, and whatever the company shall be within 7 days of, and they have to file with the registrar a notice that is giving the full address of the other place. So means this is a relevant papers you have to make when such other place in India. The next is a section 128 2. This, where a company has a branch offices in India and outside India. And here they have to see that the company has a branch offices with there is in India and outside India, and it should be have to be deemed with the compiled whatever the provision, whatever the books which are related to the transaction, which are related to the branch office, and that should be kept in an office in a proper summarized written, that is periodically you have to maintain it, and that should be sent by the branch offices to their registered office. Means whatever the thing is happened in the branch office, whatever the books they have maintaining, that should be always sent to the head offices by the branch office. And next is a, and that is a section 128.3. In this, there is a, they have to maintain the paper, they have to books of the accounts and other books or any other paper should be maintained by the company within in India, and it should be always open for inspection whenever it is the time. If they are coming for the inspection, that is at the registered office of the company at the other place in India by any director during the business hours. Means anytime any director within India, wherever they have the branch offices, they can inspect at the registered office of the company. So in this, in the case of financial information, if anything they are maintained that is outside country, all the copies of such information, if suppose if you are maintaining the accounts within India, that is whatever the accounts of in the branch offices, that always should be sent to the head office, and in the head office, that is a registered office, the directors, they can come at any time and they can inspect their books, that is in the business hours. If suppose if the company is outside India, then that is outside India means outside the country, and the copies of such financial information shall be maintained and they can produce for the inspection by the directors. That is in a condition where there will be a prescribed. That is provided that the inspection is respect of any subsidiary of the company, and it should be done authorized, that is authorized on behalf of the regulations, that is board of directors. And next is a section 128.4. In this, they have to go with the inspection each and every subsection of the officers and other employees of the company shall give the person making the inspection all assistance in connection with the inspection. Means they, when they are coming there for inspection, the board of directors, the people who are working in the company, at time to time when they come for inspection, they must be provided all the assistance where it is connection with the business. The next one is section 128.5 means yeah, the books of accounts of every company where it is related to the period is not less than 8 financial years immediately. That means whatever that they have the immediately preceding the financial year, and even where the company had been existence for a period of less for a period less than 8 years in respect of all preceding years together with vouchers and are relevant to any asset, any entry in such books should be kept in order. Suppose how we are making in our daily life. Suppose if this is in a student who are studying in a college, his record will be kept, whatever the work, whatever the records, that will be kept for 5 years. In the same way, in the business also, whatever it is related for the period is not less than financial years. And that is in the financial years where existence with the 8 years where it is preceding to year together with the vouchers. Next is under section 128.6. If the managing director, a whole time means that is a complete whole time director, they must charge the chief financial officer or any other person, they can make the controversies and such provisions of such directors, whole time director charge of finance. Means everyone can be, but the person who is a whole time director, he has a charge of finance. And next is a chief financial officer. That is such other person of the company shall be punishable with the imprisonment for extent to 1 year or with the fine shall which shall not be less than 5,000. Means if anything is done wrong, they will penalized and he was imprisoned, punishable, that is for 50,000 rupees, which may not extend to the 5 lakhs. Now, financial statement for section 129. This is a 129 section. It is fair and true statement of affairs of the company. That is company and companies. They have to compile all the accounting standards. Accounting standards means here the accounting standards, it shows the what is only if suppose a accounting standard 4 means that is amalgamation of the company accounting standard. So here the company will run according to the accounting standards wherever it is notified, and the section 133 shall be in the form and may provide for different classes of the company. And here next is a section 129. In the section of 129, annual general meeting of the company, the board of directors of the company they will be before, means they shall lay before such meeting financial statements for financial year. And next is section 129.3, where a company has one or more subsidiaries. It shall, in addition to financial statements, they have to provide the subsections, and they make the preparation of consolidated financial statements of the company and all the subsidiaries in the same form. They can make it out, and it is provided by that company shall also be attached with a along with the financial statements. A separate statement should be maintained with the features of the company. Next year, we have many more sections about the company where they have to make the financial statements legalized. And next is a central government to prescribed accounts, that is under section 133. In this, always they will be recommended by the ICAI, that is Institute of Chartered Accounts of India, and constituted under section 3 section 3 of the Chartered Account, that is Act 1949, in consultation with and after examination. In this, um, some of the things they shall be attached to the statement laid before a company in the general meeting, which is reported by the board of directors. And here the exact of the annual return as provided under the subsection. The next is the number of meetings of directors, director responsibility, and statement on declaration given by independent directors. And next is a general instructions for preparation of balance sheet and the statement of profit and loss account. In this, when they are compiled, compliances with the requirement act, it should be included the accounting standards where it is applicable to the companies, and where they are require any change in treatment of disclosure. And in this general instruction for preparation of balance sheet and the statement of profit and loss account, that is profit and loss of the company. And here the disclosure requirements that is specified in the schedule, and the disclosure requirements specified in these schedules are in addition to, not in substitution of disclosure requirement specified. Specified in the addition and the substitution, where disclosed requirement specified in accounting standards. That is additional disclosures where it is specified in the accounting standard shall be made in the notes to accounts. Always there should be a traditional statements where it is unless it is required for to be uh, disclosed on face of the financial statements. And notes to accounts, it shall contain the information in addition addition to the prescribed that is presented in the financial statement and shall provide wherever it is required. Here, depending upon the turnover of the company, the figures where you are appearing in the financial statements may be rounded. If suppose in the turnover less than rupees 100 crores, how you have to make it rounded off? There your turnover, you have to make the round off. That is to the nearest hundreds, thousands, lakhs, or million or decimal thereof. So there is a they have to make to the nearest number. And next is a rupees 100 crores or more to the nearest lakhs, millions, or crores or decimals. Now we'll come to the schedule 3, that is a part 1 format of balance sheet. So here it is very much important, that is a format of balance sheet. You have to all must go through for your it is very important for your examination. And there are the general instructions where when you are preparation of your company's balance sheet, the effects. General instructions for the preparation of your company's balance sheet. An area, the first one, it is a equity and liability. Under the equity and liability, it should be classified like shareholders fund. The first one is in the equity and liabilities. It is a one heading. Under that, shareholders fund. Under the shareholders fund, you have to check with the share capital, reserves and surpluses, money received against the share warranty. Here, reserves and surplus. What is the reserves and what is the surplus? So here, every time when the company is in a profits, they will take some part of the amount as a reserve. Means in any problem or any liquidation time, they can take out that reserves money for the utilization. And the surplus, whenever you are getting the surplus income from your business, that can be taken in the balance sheet under the shareholders fund. Money received against the share warranty. Under equity and liability, the second one is share application money pending allotment. If when you are buy the shares, when there is any pending, whatever the pending amount you have to pay to the company, that amount also should be paid immediately by the company. Next one is a non-current liabilities. Non-current liabilities are long-term borrowings, referred tax liabilities, other long-term liabilities, long-term provisions. So here, these are the things in the equity and liability. In the non-current liability, you have the long-term borrowings and other long-term liabilities and long-term provisions also there. And the fourth one is current liability. In the current liability, where you have to show the short-term borrowings, trade payables, and other current liabilities and short-term provisions. That is a complete under the equity and liability. It should be classified. It should be divided into four. The first one is shareholders fund. Next one is share application money pending allotment, and third one is a non-current liabilities. Fourth one is a current liabilities and short-term provisions. And next is the assets. In the assets, non-current assets. Non-current assets. Under non-current assets, there will be a tangible assets and intangible assets. Tangible assets means where it can touch it and we can feel it. But here intangible assets where we cannot touch it and only we can feel it. Tangible assets where it is a fixed assets. Intangible assets that is not the fixed assets. And the capital working hours intangible assets under development. And here non-current investment different assets. And next one is a current assets. In the current assets, we have the current investments, current inventories, trade receivables, mm, cash and cash equivalents, cash and cash equivalents, other current assets. So with this, we have the current assets. These are all the things where you have to learn for exam, that is a pro forma. So your next is a schedule 3, that is part 2, that is format of statement of profit and loss account. In this we have the first one is revenue from operation. Revenue, whatever the work is done from that, whatever you are getting the revenue. And next one is other expenses, that is other incomes. This should be added, then we'll get the total revenue. These are the two is the revenue what you are got. And next one is the expenses. Expenses means what? Cost of materials consumed, purchase of stock in trade, progress in trade, employees benefit expenses, description and itemization expenses and other expenses. The third one is complete profit before expenditure and the extraordinary items. Exemptions. And next, you go through all the sessions. That is the format of the final accounts. These all are not important. Remuneration.